Hello students, welcome to my YouTube channel Sun Academy. I am Naresh Sir. Today in this lecture we are going to solve a sum of profit or loss prior to or post incorporation period in financial accounts. As the given question is, Jagat Company Limited was incorporated on 1st September 20 to take over the running business of Krupa Tax from 1st July 2020. The first account was prepared on 31st December 20. Details as are given that total sale is 57 lakh and trend of sales is bi-monthly ratio is given. July-August ratio is 2:3, similarly to August-September and September-October, while ratio of October-November and November-December is 3:2. While gross profit rate is for July, August, September 30%, for October, November it is 40%, and for December it is 10%. While salaries including paid to sales manager is 95,000, while total salary is 4,80,000. Commission on sale is 190, loss on sale of investment 12,000. Entire investment was sold on 30th September. Interest on investment 24,000. Director's fee 1,80,000. Stationery printing 45,000. Advertisement expense 3/8 fixed 3,04,000. Journal expense 24,000. Office rent 4,000 up to 110. 5,000 thereafter, and bad debts required 8,000 debtors of pre-period. From this we have to prepare the. Now you can see, as the question was, there is a trick in the sales, but first of all we will find a time ratio. For pre-period and post-period. Company was incorporated on 1st September while business was taken from 1st July. So pre-period is July and August, while post-period is September, October, November and December. So 2:4, that means 1:2 will be time ratio. While turnover ratio, it is very tricky. It is given July, August 2:3, August, September 2:3, September, October 2:3, October, November and November, December 3:2. So how is it going to be solved? July, August is 2:3, while August, September 2:3, September, October 2:3, October, November 3:2 and November, December. Now you have to start from July, and both these ratios are to be multiplied in this way, that multiply this with 4, so you will get 8, 12. Now ratio of July to August is 8:12. So August and September are 2:3. They have ratio of 2:3. So here the ratio of August must be similar to this. So multiply this with 6. 12:18. Here the ratio of August is 12 and here also the ratio of August is 12. Now here it is 18 of September, so ratio of September with August must also be 18. So this will be multiplied with 9. 9 2 ja 18, 9 3 ja 27. Here it is 27. So here it must also be 27 for October. So this will also be multiplied with 29. So here it will become 18 for November. Now ratio of November with December is 3:2. So in the this ratio November must also be 27. So 9 3 ja 27 and here it is 18, sorry. So 18, this will be multiplied with 6. 6 3 ja 18 and 6 2 ja 12. Now you can see that each and every month has same ratio with one another. As August, here it is 12, so here it is also 12. September 18 18, October 27 and November 18. Now we have pre-months of July and August. So sale of July and August is 8 plus 12, while for September, October, November, December, September is 18, October is 27, November is 18 and December is 12. So 20, 30, 40, 50, 60, 70, 75. 20 ratio 75, that means 4 ratio 15. Now you have to find the GP. This was turnover ratio. GP, gross profit. So July, August, September, October, November, December. First of all, we will find the sales. Sale. How is it going to be found out? Eight divided by 95. Total sales is 57 lakh. 57 lakh into 8 divided by 95. So sale of July is 3 lakh. Similarly for August, $4,50,000. This is of August. For September, 6,75,000. For October, 10,12,500. This is August, September, October, November. That was 57 lakh into 8 divided by 95. 57 lakh into 8 and divide by 95. So for November, if we come 57 lakh into now if we divide the sale for each month, that will be July, August, September, October, November and December. For July it will be 57 lakh divided by 95. So for 1 it is 60,000, for 8 it will be 4,80,000, 720. For 1 it is 60,000, 57 lakh simply divide by 95. For 1 it is 60,000, so for 8 480, for 12 720, 10 lakh 80,000, 16 lakh 20,000 and 10 lakh 80,000, while for December it will be similar to August, 7 lakh 20,000. Now rate of gross profit is 30% for July. That means GP will be, this is sales, this is sales, GP gross profit will be 480 into 30%, 1,44,000 for July. Similarly for August it is 30%, 720 into 30%, 2,16,000, 1080 into 30%, 3,24,000. Here it will be 72,000 because for December it is 10%, and while for October and November it is 40%. So 16,20,000 into 40% will be 6,48,000. 10,80,000 into 40%, so 4,32,000. Now GP for pre-period will be this, and for the post-period this will be total of this amount, 144 plus 2,16,000, 3,60,000 will be the gross profit for pre-period, 3,60,000. While for the post period it will be 3,24,000 plus 6,48,000 plus 4,32,000 plus 72,000, 14,76,000. Then after it is salaries. This was as given. As we know, gross profit is distributed in the ratio of sales, but here each and every month the sale was different, and rate of gross profit on sales was also different. So we found for each and every month. Salaries including paid to sales manager is 95,000. This is for sales manager. 95,000 divided by turnover ratio will be taken for this. 95,000 divided by 95 into 20, 20,000 and 75,000. Then after remains 480 minus 95,000, 3,80,000, that will be distributed in other. Time ratio is 1:2. So 480 minus 95,000, 385 divided by 3, 1,28,334 and 2,56,666. Commission on sales. that will be distributed in turnover ratio, that is 1,90,000 divided by 95. So 20 into 40,000 and 1,50,000. Then after it is loss on sale of investment, entire investment were sold on 30th September. September comes in post period, so 2:1 as given. Loss is 12,000, so 8,000 and 4,000. Interest on investment, that will be distributed as per time ratio, 24,000, that means 8,000 and 16,000 in the column of income. Director's fee, director is always appointed in company, so that will be allotted to post period, 1,80,000. Stationery and printing, that will be allotted in time ratio, 45,000, that means 15,000 and 30,000. Time ratio is 1:2. Advertisement expense, fixed in time while variable in turnover ratio. 3/8 is fixed, 3,04,000 1,14,000 in ratio of 1:2. So 38,000 and 76,000. Fixed is always distributed in time ratio while variable in turnover ratio. Total advertisement expense is 3,04,000. So remaining 190 in turnover ratio. General expense 24,000. Time ratio 8 and 16. Then after office rent as given, it has been said that 4,000 up to 110, it is 4,000, so 4 and 4, 8,000 for period. 8 and 10, 5,000 was for November and December, 18,000. Up to October it is 4,000, so 4,000, 8,000. Then after for November, December it was 5,000 for each month, 5 and 5, 10, 10 and 8, 18,000. And at last it is bad debts recovered. As given, bad debts recovered is being said for the debtors of pre-period, so it will be returned to the income of pre-period. Now we will find the net profit. 360 plus 16,000, 3,76,000 is the total of income and GP. Then after expenses will be subtracted, minus 20,000 minus 1,28,000, 334, 48,000 15,000, 38,000, 40,000 and 16,000. 3,76,000 minus 20, 1,28,334 minus 48,000, 15,000, 38,000, 40,000 minus 16,000. That is 40,666 is the profit of pre-period. While for the post period it is 14,76,000 plus 16,000. 14,92,000 minus 75,000, 2,56,666, 1,54,000, 2,10,000, 76,000, 150, 16,000 and 18,000. 5,36,334 is the net profit of the post period. Now if I repeat the answer again, first we have to find the time ratio. The time ratio is July and August, 2 months for pre, and September, October, November, December for post period. That means 1:2. Now to find the turnover ratio, there is a trick how for turnover bi-monthly ratio is given. That means for July, August, August, September, September, October, October, November and November, December. How is it to be found? First of all, we will take the ratio of July and August. I will multiply it with 4. You see, for this kind of ratio, you have to go by trial and error method. You cannot imagine directly that which number will be multiplied first. 4 to the 8, 12. Here the ratio of August is 12. So here it also needs 12. So this will be multiplied with 6. Then after September became 18. So this will be multiplied by 9. 9 to the 18, 9 3 the 27. October became 27. So here it will also be multiplied with 9. 9 3 the 27. 18. November became 18. So here it will be multiplied with 6. 6 3 the 18. 6 2 the 12. Okay, now for July, August it is 8, 12, and for the remaining month 18, 27 and 18, 12. 20 ratio 75, that means 4 ratio 15. First we have to find the sale for July. Into 8 divide by 95 into 12 divide by 95 will come the sale of August. Into 18 divided by 95 will give us the sale of September. Similarly for October, November and December. Then after we have to find the gross profit ratio for July, August, September. It is 30% of each and every figure. For October and November 40%, while for December it was 10%. Now both these figures will give the gross profit of pre-period, and sum of these 4 figures will give us the gross profit of post period. Then after salaries, sales manager salary will be allotted in the ratio of turnover, while remaining other in the time ratio. Commission on sales on turnover ratio. Loss on investment were sold on 1st October, so 2:1. 2:1. Interest on investment will be a portion in the time ratio. Director is always appointed in the company, so salaries will be included in the post period. Stationery printing in time ratio. Advertisement fixed in time ratio while variable in turnover ratio. Journal expense and time ratio. Office rent, as it is said that up to October it is 4,000. So 4 and 4, 8,000 for pre-period, while 18,000 for post period. 5,000 plus 4,000, 8 and 10, 18,000. Bad debts recovery is for the pre-period, so it will be written on the income column of pre-period. Then after getting the total of GP and income and subtracting all the expense, you will get the profit of pre-period, and similarly for the post-period. Now students, if you are getting with our lectures, then do comment, share the link of our videos, and if you haven't subscribed, then do subscribe for the coming the lectures.